good afternoon. Hope everybody's doing okay here. This is Neil with Simpler Futures and the Monday, March 13 video after quite the crazy weekend. So here's what all you got going on um, this week, and it's a host of a lot. Okay, so we are now quoting. I'm going to be quoting June index futures prices, no longer March. As of right now, today, this video tonight, going forward, I'll go ahead and roll with the roll that is officially today. So I'm rolling today. These are June quotes. They are 34 and a half-ish. Just do 35. It's just so much easier. Just do 35. They're 35 points higher in the S&Ps than any March number that that you're looking at. Like right now, if they're 3,900 in the June, they're 35 points lower than that in the March. Okay, so there's your kind of a equivalent adjustment or whatever. The next thing is, of course, the banking just news, big news over the weekend, and the market. Even with the Fed saying today, the Fed's saying the depositors are going to be whole and no issue with deposits. And risk there, the market really didn't come out of the hole very much and bounce. And so that's telling me that it's pricing in the potential for, additional risk, I guess, if you will. What's potential for additional unknown that we don't even know yet. Additionally, Goldman Sachs says now that they do not expect a rate hike at all in the March 22nd meet by the FOMC. Whereas late last week, just as recently as late last week, the Fed funds had priced in the highest potential for a 50 basis rate hike, and now it's down to a quarter, if at all. It's between a 0 and a quarter now, and Goldman Sachs says it's going to be 0. We're not doing anything. I said, okay. Additionally, we got CPI and PPI this week. You got Eurozone CPI, also an ECB rate decision, a University of Michigan prelim, and then on Friday, the triple witching expiration. All of which while, let me take you real quick to a daily chart, all of which while we get an up down back to the middle day today that is sitting presently squarely, just absolutely perfectly on top of balance from this sideways distribution of 12 December 16th by January the 6th right back here. So now one other thing I want to show you this chart. This is the quant levels for this week. You can see we almost touched both L1 and H1 for the week, all in just today's session. That's how much volatility there is here. 600, by the way, 600 and like almost 50, no, it was 650, 650,000 contracts traded overnight last night before we even got to the opening bell this morning on 132 points of range in the S&Ps from top to bottom overnight last night on 650,000 contracts. These are huge numbers, okay? Easily 2 times normal of even a high end of average, right? I mean, just enormous numbers here. So this is a long-winded way of saying it doesn't matter what I think. Come on. I mean, this week with all that's ahead of us and certainly this unknown for what if we get another, a third, a fourth, bank something this week. I mean, give me a break. This thing, it'll implode, if something like that. But I don't know that that's the case. I say, what if, right? I don't have a clue if something like that's around the corner. I know volatility came all the way back down to its low for the day today. It started high and came all the way back down to its low on the VXX and the VIX and that kind of thing. So that means volatility could trigger short tomorrow. With the breach of today's low, volatility triggers short tomorrow, which has this thing actually sideways to higher, is what the ES would be on that, right? And it makes sense that it could come from here. I mean, this was essentially it exceeded it initially first before coming back, but this was essentially our bearish target. Remember, the bearish target was the balance of this sideways group of trade December 16 by Jan 6 right in here, right? Was a reset on the year back to year open, et cetera, et cetera, et cetera, right? So we're back to, remember, you tacked on 6.2% in January, a little follow through the first part of February. It was up to about 9% at that point, and zoop, all the way back to beginning of the year, back to scratch. Okay, it's a good place to reset from. What I guess I'm trying to say is this: I would like to be cautiously optimistic, i.e., bullish, cautiously optimistic from here. That it doesn't really rally, but it holds a sideways to higher. And so by that, we go to here, volume, and we say, okay, sideways to higher, what does that look like? Well, last week's balance in the June, remember I'm quoting June now, last week's balance in the June was 39.90. That'd be a bullish target. It hit weekly pivot, wherever that's in here. I mean, it hit that today. Basically rallied up and just essentially found last Thursday of last week's point of control, basically is what this thing did today, and has established balance today, which is decent because it's certainly better and certainly higher than Friday, right? Friday's went out all the way down here at the bottom. So you had Thursday's balance at about 39.20, which is what today's balance was. That's decent. That's not bad. Certainly better than bad. I mean, better than last Friday. And then last week's is just up here at 39.90, and and that's sideways to higher. I mean, that's at least holding it, keeping it together, right? With a lot of information yet still to be learned this week: CPI, PPI, ECB, that's priced in right now. They're looking at 50 basis hike, ECB, plus some Eurozone CPI, and the list just goes on and on. And all the while, all of this banking stuff that's going on, the best we can do is say, look, here's the plan. Let's see how this thing holds together. If I don't want to see this. I don't, this causes a lot of headache for a lot of people. But if down, then line in the sand 39.20 June. Remember June. Today's point of control. So line in the sand 39.20. If it reaches up there and fails and starts to really look like it's fallen, then bearish target be down here 37.85. I got to give you a bearish target, just as as much as we also need to have a bullish target and a line in the sand. I do have a preferred case here, and that is that its thing is. I would like to see it having dropped, far enough that we can kind of keep it sideways to support here into this week's expiration. Frankly, if this thing were to go out exactly as it sits right here, right now into expiration, it would be huge for me, because I've got those 3850 SPX flies on for this week, and so that'd be just absolutely fantastic. So sideways in here, kind of keep it together on balance, and with any luck and fortune that the market doesn't just fall out of bed and really hurt some people, which I don't want to see, because that's just a lot of pain for a lot of people. Just keep it together and start to migrate its way back up here into like last week's balance, and then we get to take it from there. After this week, this Friday, I do want to get bullish back for 2 weeks out. March 31st, I'm going to be targeting 4060 or 65 in the SPX. So I've got that in mind. But we got to get through this week first. So that's what I got. Good trade. Nice evening. Let me know in comments if what you think about all this. But it certainly is a handful. This is a handful. This kind of volatility, you gotta have a risk plan in place and really strictly make sure that you absolutely adhere to it. Don't deviate from it, because these are big numbers that can get away from you pretty quickly, and don't let that happen. Okay.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me